So there's a type of business loan that not a lot of people think about. You're used to seeing business loans for real estate or lines of credit, even business loans in the form of a business credit card, which is a great way to start building credit for your business. But not a lot of people understand the opportunity behind business loans around recurring revenue. Now, this is not necessarily a new thing, but not a lot of folks know it works. A lot of folks, if you understand business loans in the tech space, so with SaaS, what we call software as a service, those type of business models would be things like Canva and others who have recurring subscriptions per month, and users pay that recurring subscription per month. They have recurring revenue that they can count on coming in month after month after month. There's a couple ways they do that. Sometimes they'll offer you annual plans at a discount, and so they know per month for that year the amount of income that they're going to have coming in per user. But this recurring revenue is really an asset that you can use to get business loans, even if you're an early stage revenue or pre-revenue. Back off of that. Even if you are an early stage startup, you can use recurring revenue as an asset to get a business loan. These also work well if you are thinking about raising money from investors. Why? Because when you go to investors, it's not a bad thing, but it's how it works. When you go to investors, you have to give up equity in your business. But if you can take out debt, assuming you're comfortable with that idea and your business is producing enough revenue to afford that debt, right? Then you can avoid giving up equity in your business. And this is where recurring revenue business loans come in handy. Now, there's a couple companies that offer this. One of the most popular ones, or at least the largest one, would be Pipe. If you can look them up, you'll see that they offer basically a marketplace for these types of loans. And I actually happen to be co-founder in another business model called Revtap, where we provide business loans to recurring revenue businesses. With our model, you don't have to be in the SaaS industry. You don't have to be a software as a service. You can have any type of recurring revenue, and we will give you a business loan based on the amount of recurring revenue you have. We have an algorithm we use to determine the percentage of the money that you have coming in every single month. We back out what is called churn. And so what this is if you have $1,000 a month, most businesses are going to lose a certain percentage of those users every month who either just don't renew their subscription, or they did it for 1 month and they didn't take the annual plan and they turn it off. So we back out this churn amount and we come up with a figure that we're able to loan to you at reasonable rates. And then the great part about this is you don't necessarily have to pay principal toward that loan. You can just kind of pay interest along the way, use the money to help scale and grow. And then we are working on a way to use the blockchain to deliver this type of thing, and then also potentially use NFTs as a way for investors to buy pieces of companies' recurring revenue, and then they'll be able to even trade those off. So be mindful that if you are in some sort of business that has consistent recurring revenue, that is an asset you can leverage and you can use to get a business loan instead of going the venture capital route, instead of going the angel investor route, and maybe even instead of going the typical business loan route, such as an SBA loan. You can use this type of facility to get the capital you need to grow.